Okay. In this situation, we are having two forms of income. That is employment income as well as investment income in the form of dividends. Okay, so we are looking at two things: employment income and dividend income. So a lady by the name Lily has a salary of 22,000. Always remember that these figures would be annual figures, okay? Because taxation is taxed on a fiscal year, okay? And remember that the UK fiscal year starts from 5 I mean yes, 5 April. Let me just say 6 April to 5 April. Okay, so that's 6 April, let's say 2024, because we are in the 2024-2025 fiscal year, 2024 to April 2025, if I'm not mistaken. Okay, so the figures you will be given will normally annual figures, right? So sometimes you need to prorate, sometimes we are not going to do so. All right, so this guy, this lady is earning a salary of 22,000 pounds, right? But they have already paid during the year, they paid payee of 1,600. Usually payee is deducted on a monthly basis. So they have already paid about 1.6 pounds. Then she earned 12,000 pounds of bank interest. She also earned 600 pounds in dividends. So an additional income there was savings income. I'd not picked the 12,000 bank interest there. All right, so our pro forma now has got 3 columns: non-savings income, which is represented by employment income. Sometimes it is represented by trading income. All right, then there is dividend income and savings income. So our pro forma is going to be like this. Excuse me. Oh yeah. So the employment income 22,000 is given in the question. All right, and this gives us a total of that. Then bank deposit of 12,000, the bank deposit interest. Okay, then 1,000 dividend. All right, this is some typo because we'd indicated 600 pound there, right? So we can just adjust it to 1,000, right? Let's adjust it to 1,000 pounds. All right, so with that in mind, we're going to total up the 1,000 there. Now, we then total up the net income. Okay, remember this is our net income row. So we've got 12,000. We've got 20,000, 12,000, 1,000, 35,000. Yes, because that's 22,000 plus 12 becomes 34,000 plus 1, 35,000. That's correct. And you ask yourself, is this below 100,000? Yes. So I charge 12,570 personal allowance, and this means the non-savings income has become this much. Sometimes this personal allowance will reduce the income to below below 5,000. And when it goes below 5,000, you then have to do the computations which are related to the 5,000 relief. Okay, we now know how to deal with those. Please, if you have forgotten, revisit that part of the video. Okay, and the income, the savings income is 12,000 and the dividend income is 1,000. So if you add across, you're going to arrive at the ultimate taxable income of 22,430. All right, so that amount is, this amount shows that this lady Lily is a basic rate taxpayer. However, her income, her non-savings income, of 9,430 is above the 5,000 pound threshold. Therefore, she is not entitled to the 5,000 benefit. Okay, she's not entitled. She's nowhere nearer. So we are going to first compute the non-taxable income. Okay, here as you can see, 9,430 is subjected to 20% tax for the basic rate taxpayers. All right, and she has to pay 1,886 on that income. Then on the savings now, the savings, because she's a basic rate taxpayer, she is entitled to a 1,000 new rate band. Okay, 1,000, and she has to pay 0 on that. And then the remainder, 11,000, that is 12,000 minus 1,000, and we are left with 11,000. And the rate which is applicable is the basic rate taxpayer's rate of 20%, and she pays that amount. Remember, we said on dividends, a taxpayer, no matter what level, is entitled to £500 annually, okay, which is going to be not taxed. All right, and then the remainder, because there was only 1,000 of dividend income, so the remainder 500 is then going to be subjected to the tax rate for basic tax rate payers for dividends. All right, which is 8.75. Remember, there were 3 rates. Let me take you to that place. Sorry. Okay, here. I indicated that this one is for the basic rate, followed by the higher rate, and then for the additional rate. Please take note of this. Take note of this. Okay, let's move on. Let's move on to the place where we were at. Is this the place? Is this the place? No, yeah, we're here. Okay, so that's the computation, and we then have to calculate the income tax liability, and this comes to 4,130, and then we then deduct the payee. The payee was a tax which was being deducted by the employer from this lady's income. Okay, every month you submit, there are some deductions on your salary which are remitted to the tax authority, okay, in the form of payee, right? Pay as you earn. So 1,600 had already been deducted. So we then have to reduce the the income tax liability, all right, from this amount of 4,130 to 2,530. Are we together, ladies and gentlemen? Good. So that's how the dynamics of taxation are at play. Okay. Now let's look at this individual. This information about Petros. This guy had a trading income or trading profit of 190,000. This is way above the adjusted net income threshold of 125,000. This guy obviously is not entitled. Okay, he is not entitled to the personal allowance. This is why we put a 0 there. All right, automatically, he is not entitled. So we're going to tax the 190,000, the full amount of it. However, we are not going to straight away charge the 45% on 190,000. That's improper. Instead, we are going to charge gradually. The first income, the first 37,700 is going to be charged at the basic rate of 20%, and he pays 7,540 on that income. Then we enter the second band. Remember, the second band here now, this one is between, this is 125,140 minus the initial band of 37,700. Okay, and obviously it should be this amount, and the tax is going to be that one. Okay, and then the balance now, this balance, you do the same. You ask yourself, the amount to be taxed is 190,000, which is this amount. Okay, but we have already charged 37,700 and 87,440. So what is the balance? The balance should be 64,860, which is this amount. Please verify with your calculators. If you find different figures, always make a comment in the comment section below. I'll attend to those so that my videos become industrial standard. So that's what we are talking about, ladies and gentlemen. Okay, there is no personal allowance to this guy because his income has exceeded the threshold of 125,140. So his total tax liability becomes that one. So let us see the error which could have happened if we had straight away charged 190,000 at 45%. How much tax this guy would have paid? So 190,000 multiplied by 45%. This guy would have paid 85,500. This is why we are saying this is wrong. He should pay 71,700. So on the multiple choice, you're going to find the 85,500 there, and you'll be in for it. You come back to the tutor and say, tutor, he didn't teach me well. I failed taxation. No, you fail because you do not watch the videos to the end. Watch the videos. Always get in touch with the tutor. Let us interact, ladies and gentlemen. Let us interact. We share our experiences. We discuss these things out. Nobody should fail taxation. Nobody should fail UK taxation. Everything is sorted out, guys. Let's move together. No stones should be left behind. Nobody should be left behind. We need to work together as a team. All right? Okay. All right. So basically, we have dealt with a lot of issues, right? Which to some extent they are cumbersome, they are tedious, but if you are patient enough, you could grasp the concepts as easily as possible and move on with your life. All right. So in these notes, there are a lot of things which you would need to be accustomed to. there are aspects of gift aid, right? Or donations to charities and so forth, which are going to be given or a taxpayer would have done during the tax year. So your job is to determine how those things have to be dealt with within the taxation environment. So what is a gift aid? A gift aid is a UK tax relief scheme that allows charities to claim back 25% of donations from Her Majesty revenue. All right, the HMRC. Okay, that's Her Majesty. So revenue and customs. Alright, in countries like Zimbabwe, they would be having a different name. Okay, in Zimbabwe, we use what is called the ZimRA. Okay, Zimbabwe Revenue Authority. So the names for the UK, you need to refer to the exact authority. In the UK, they use the HMRC, Her Majesty's Revenue and Customs. Okay, the R is for revenue, it's not for royal, it's for revenue. Okay, so the gift aid issue is something that is very, very resident. It's something always coming in every examination. So you need to understand how the gift aid scheme works. So when an individual donates £8, the charity claims back £20 from Her Majesty's Revenue and Customs, making the total donation £100. This is equivalent to a 20% tax relief because it assumes the donation was made from pre-tax income. High rate 40% and additional rate 45% taxpayers can claim further tax relief through self-assessment. So what is the benefit of gift aid? Charities receive extra funding at no additional cost to the donor. Higher earners reduce their tax liability by extending their basic rate tax band. Gift aid donations lower adjusted net income, potentially restoring part or all of the personal allowance if earning exceed 100,000. So sometimes when you reach at the net income position in our pro forma, you discover that after doing the computation, for you to, there are certain computations you would do to justify the existence of the personal allowance. Okay, it's very simple. Okay, I'm sure I'm going to look for an example that would explain this concept in detail. All right, so if your income is over £100,000, making gift aid donations can help reduce your effective tax rate by lowering adjusted net income. Let's look at this example. Maybe we will be answered. In the tax year 2024-2025, excuse me, a freelance web developer, Rohan, generated a substantial profit of £103,000 from his online business. He also earned income from a variety of investments, including £7,000 interest from high-yield savings accounts and £9,000 dividends from his portfolio of technology stocks. Rohan had taken out a loan to fund his entry into a collaborative tech venture and paid £5,000 interest on his loan. on this loan during the year. Furthermore, he is a regular supporter of a local children's charity, making a 12,600 net donation through the gift aid scheme. Calculate Rohan's total income tax liability for the 2024-2025 tax year. So there's been a lot of information, and you might end up like being dazzled, or maybe because of exam pressure, you might be tempted to just end up writing whatever nonsense you have in your mind and just leaving everything to the Almighty. But let me tell you, if you are not systematic, you are not careful, you are going to write this paper more than 5 times. So you need to be very patient. Be patient. It's a very simple paper, but you just have to be patient and systematic. So let us break down the question first before we move on to the pro forma. All right, so the incomes, let us identify the incomes, because tax is going to be charged on the incomes. It is only going to be reduced on certain qualifying expenses. Not every expense is going to reduce the tax, but if it qualifies. So Rohan generated trade income. There is trade, some profits there, right? That's the income from his business. And then he also earned income from investments, including 7,000 interest. So you can see that this one is trade income. This one is savings. All right. And what else? And 9,000 dividend. So we are having also a dividend. So our pro forma is now reached. Some 1 mark is actually on our way. By listing those figures, we might be earning some 1 mark. Then Rohan had taken out a loan to fund his entry into a collaborative venture, tech venture, and he paid 5,000 interest. So you can see that this guy has taken out a loan to fund the business. So it's a non-savings activity, right? It's a non-savings activity, but it is qualifying. It is to reduce the amount of tax payable, the non-savings taxable income has to be reduced by that. It is not going to reduce the savings income. That's where students make it wrong. Because if you do not treat your figures right, you are going to end up being in trouble. You'll be in trouble. Okay, then we're also told that there is a gift aid activity that took place. All right, so we now have these things in mind and we are ready to go, ready to roll. Okay, now this is our table, ladies and gentlemen, because the table is not going to help you if you do not know what these figures mean. So as we have already indicated, we have got 103,000, which is trade income or trading profits, right? And the total is going to be there. Then we've got bank interest, 7,000 from the question. Yes, 7,000, this one. Bank interest, and then 9,000 dividends, obviously, and then we total up, total, and we get that one. All right, now, qualifying interest. Do not put this interest under the savings income, because the moment you reduce this 7,000 to 2,000, you are now going to work your figures. When you are now calculating the tax liability, they will be wrong. So put it in the right place here. It has to reduce non-savings income because it was a non-savings interest charge. Okay, please revisit the start of the video. That's when I explained all these things. So here we are now left with 98,000, here 7,000, 9,000, and we get a total of 114,000. 114,000. We know so far we have been telling ourselves that if a taxpayer's income is above 100,000, therefore, we then have to say, is it above 125,000, 140, something like that. So in that case, if it is below 125,140, I'll cross-check this figure. I normally forget. Let me. Sorry for that. Just want to see the upper margin. Yeah. All right. So I'm right. It's 125,140. Okay. So that's the figure I wanted to verify. Good. So because that's the boundary for higher rate taxpayers. All right. So this income, okay, the income here 114 is between 100,000 and 125,140. So the difference there should be I explained the concept where if the income falls between 100,000 and 125,140 pounds, we then have to reduce the personal allowance. We reduce the personal allowance by the 50% of the difference. Okay, of the difference of the figure between 100,000 and the figure in this case is 114. So we are seeing that we are going to say 50% multiplied by 14,000, and we can see that we are looking at 7,000, right? Okay, we are looking at 7,000. So in this case, the personal allowance should have, in this case, the personal allowance should reduce by 7,000. So that is 12,570 minus 7,000. This means it will come to 5,570 as the personal allowance. However, the question told us that there was, a donation to the local charity through the gift aid scheme, okay, which is an approved scheme in the UK. If you want to make your donations, you have to make through this scheme so that you enjoy some tax reliefs. All right. So if the amount paid has been made through this scheme, it means that an individual could benefit somehow. All right. So we know that the total income, according to our computation, has been 114,000, which means our personal allowance was affected. Okay, our personal allowance was affected. Instead of enjoying the full personal allowance, we are going to enjoy a reduced allowance. So we don't want that. We need to look for other avenues as tax planners. So here, because there has been a donation which was made through the gift aid scheme, we then need to work around. So this figure 12,600 was paid net. We need to gross it up. So let's gross the donation. The gross figure should be 12,600 multiplied by 100 over 80. So 12,000 600 multiplied by 100 over 80. So it means that the amount to be considered as having been donated, okay, the amount to be considered as having been donated is 5,750. So you simply donate 12,600, but in the eyes of the taxman, for your generosity, the taxman is going to say you have actually paid, you have donated 15,750. So let's see. So the initial trading income or let me just say net income was 114,000. But now we need to deduct this with 15,750 to see if we are going to be below the 100,000 threshold. 114,000 minus 15,750. So we are now resting at 98,250. So obviously we are now qualifying for the full personal allowance of 12,570. Are we together, ladies and gentlemen? We are now qualifying. Okay. Okay, there was a figure that was amiss there. I'm sure you have identified that with me. I'm sure you have also seen it. Okay, so we then have to proceed. Okay, so once you did the computation, once you have grossed up the donation, you realize that you are now falling below the 100,000 threshold, and it means that you are now entitled to the full personal allowance. Okay, so that working is very, very essential. Okay, so this is the computation, ladies and gentlemen, we have been discussing about. Okay, so this was the grossing up of the gift aid, and we obtained that one, and we have seen that we are now falling below the 100,000 threshold. All right, now you need to go a step further, because on top of the personal allowance, you then have to also enjoy the extended basic rate. Okay, you also have the chance of enjoying the basic rate. So on top of the personal allowance, you're also going to enjoy the extended basic taxpayer rate, all right, from the grossed up benefit. So obviously we know that the basic rate ends at 37,700. I mean the band ends at 37,700, but it can be extended by the gift, by the gross amount of the gift aid, right, which was 15,750. So if you add 37,700 and 15,750, you are going to arrive at this amount. So it means that all these are going to be at 20%. Instead of, remember, the 20% ends at 37,700, but because of the gift aid, you are now going to reach to 53,450 at 20%. This is what you are seeing here. All right. Then, because we are the taxable income, the non-savings was 85,430. It simply means that the balance now, that is um, the amount is 85,430. Okay, 85,430 minus the amount that has already been treated, the 53,450. So it means that here's a 0, 13, 8, okay, 18, 8, this is a 5 there, 14 minus 5, that's a 9, okay, and there is a, it becomes 4 there, and come to 1, 8, okay, no need to 8, so it means that there is now 31,908, and this is the figure we are talking about. That's the balance for the, remember we are dealing with non-savings income first, but this balance now, because we've already exhausted the basic pay rate, so it means that we are now charging this balance at 40%, which is now the higher rate, and we have to pay 12,000. Let me verify with my calculator. Okay, seems like I'm running away from the camera. Okay, so let me use my calculator. We are simply saying 31,980 multiplied by 0.4, that's 12,702. Then once you have dealt with those things, then move on to savings income. The savings income, this guy, okay, this guy is within the higher rate, so he is no longer entitled to the 1,000 deduction, but he can deduct, he can utilize the 500 pounds at 0%. Okay, he's entitled to it, and then the remainder, because the income was 7,000, so 500 is already gone, so the balance is 6,500 at 40%. Why 40%? Because he is a higher rate taxpayer now, so we charge that one and get 2,600 as the tax. Remember, this is the tax column. Okay, and then we move on to the dividend. Dividend, we are entitled to 500 pounds at 0 rate, so we do that one, and the balance, because it was how much? It was 9,000, so the balance should be 8.5. Multiply now. Okay, now that's something else now. Okay, that's now something else. Why are we charging 33,000? Who can tell me why we are charging 33,075? Okay, ladies and gentlemen, we need not to guess these figures. They are not subject to guessing. They are not a matter of guessing. So if you come to your tax table, okay, the tax table, the dividend income has got its rules. Okay, the dividend rates. So the basic rate is 8.75, but we now know that this individual is a higher rate taxpayer, so we are choosing 33.75%. Okay, so that's the rate we are going to use, right? So if you come here now, okay, I'm sorry, occasionally I need to restart and so forth. All right, so as you can see there, we are using this rate because this individual is a basic rate taxpayer. Okay, so I'm sure all the figures have been explained, and if you do your computations, you could see that the amount of tax, let me verify the figures because they were done in a hurry. 10,690 plus 12,792 plus 2,600 plus 2869. That's 28,951. Good. So that's the idea. All right. All right. Do we still need to explain anything else? I think we are done. I'm going to do a past exam question with you guys so that we explain other issues. Other issues we need to discuss are actually related to the use of this. This is a very important thing before we do a question paper, right? Or a previous exam question. You need to be comfortable with this information, okay? These tables, because if you are not comfortable using them, then you're going to be in trouble. All right. So we've talked much about taxation of employment income as well as trading income and so forth. The savings income, the dividends, and so forth. There are also issues we need to be comfortable with. Okay, please understand the issues of residence. Understand these things because they're always going to come. They are always going to come. So please always pay careful attention and devote much of your time to these aspects. Okay, the issues of residence. I think we need to discuss these issues because let me touch those items in the notes because I don't want you to be left behind. Okay.